Hello everyone. This week we will continue some other CPA materials related to governmental accounting, and it is a continuation of your last unit. In Unit 9, you will see encumbrances, journal entries, and few other special items, and mostly it will focus on fund accounting, different type of funds, and how the financial statements would look like. So let's start with the first topic in Module 1, which is encumbrances. You are familiar with this term, you know the purpose. It's mostly the same purpose that governmental entity records for their budgets so that they can monitor how much money they are spending, and for effective monitoring purposes and not to do any overspending, they record the budgetary entries, they record the encumbrances. And when you placed any order, you record the encumbrances, and when the item is purchased, you record the actual purchase and you eliminate the encumbrance journal entries. Now here you will see slightly little difference between the textbook and the Baker content. In textbook, the term which is used for crediting is encumbrances outstanding, but the Baker uses the term budgetary control. Both are same. So now let's take an example. The example that use Progressive Township, they initially budgeted or appropriated $100,000 for purchasing 2 sanitation trucks. That was their budgeted numbers at the beginning of the year, and then they placed purchase order to buy those 2 sanitation truck. When they placed the order, each truck was for $45,000. So initial budget or appropriation was $100,000. When they placed the order, it was $45,000. And then when they will actually purchase the item, you may see a different numbers. So now here, what we will do, we will record the encumbrances journal entries when there is a purchase order, and we debit encumbrances. So debit encumbrances and credit budgetary controls. And for 2 trucks, $45,000 each. So total encumbrances number will be $90,000. Remember, in textbook, the term is used as encumbrances outstanding. Baker book uses the term budgetary control. So then what happened? Then they actually purchased the first truck, and for that they paid $44,000. So when they actually purchased it, they can pay cash immediately, or they can record it as a voucher payable. That means which they have to pay very quickly in your future, and they perhaps receive the truck too. So they will record the expenditure journal entry, expenditure debit, or if you want, you can write expenditure sanitation truck, and then credit voucher payable. And remember, this is the actual purchase which happened at $44,000. They just purchased 1 truck, and at the same time, what you have to do, you have to eliminate that 1 encumbrances. So for 1 truck, our encumbrance or purchase order amount was $45,000. So I'm going to eliminate it. Eliminate means we will do the reverse entry. So we will debit budgetary control. Again, it's for 1 truck they just purchased. Another is still remaining as encumbrances. So eliminate budgetary control. That means the credit item, we debit it $45,000, and credit encumbrances $45,000. So this is how they will check how much they actually budgeted at the beginning of the year, how much they planned for when they placed the order, how much they are spending when they purchased it. Remember, it's a truck. Sounds like a long-term item, but we never record any long-term assets. Rather, every spending, we call it expenditure. So they did one truck, and then if you look at the table, you will see that the whole scenario here, and it calls like BAE, what was budgeted, what was the appropriation for 2 trucks, that was the budgeted when you recorded at the beginning against your estimated tax receivables or the tax that you are going to collect, and you plan that you will spend 100,000 for 2 trucks, and then what you did for 2 trucks, purchase order 90,000, and then actually you purchased 1 truck paying $44,000. So then if you look at the balances at the end of the year, you will see here, first we have these appropriations, which was credit item in your budget journal entries. Then we subtracted 90,000 as encumbrances, so we have $10,000 still as appropriation or surplus, and then we reversed it for purchasing the first truck, so we debited it. And then when you record the actual item, you will see here you actually spent $44,000. So now here you will see you still have this $11,000 remaining in your appropriation. So now assume that first year ends and you wanted to purchase 2 trucks, but actually you ended up with 1 truck. Then what you will do? Remember, the encumbrances amount we have to eliminate. Budgetary journal entries and encumbrances we recorded, but at the end of the year we have to eliminate it. So we still have $45,000 remaining in these encumbrances and budgetary controls, so we will eliminate or close that first. Although we didn't buy the truck, but we can carry forward that money which is still remaining as a fund balance from 1 year to another year. So what we're gonna do first, we will close the other $45,000 at the end of year 1, since we didn't buy the second truck. So we will debit budgetary control, and then we will credit encumbrances, and this is the other trucks money we still have. This is how we close all encumbrances. We could not have any balance at the end of the year. But now our plan is to buy the second truck immediately next year. So what we're gonna do, this $45,000 we'll keep aside in our fund balance, so that we know this amount is dedicated or committed to buy the truck. So what is fund balance? If you remember from your basic financial statement concept, so for governmental accounting, you on your balance sheet, imagine you have all of your items on the one side, which we call like current resource based items, right? Although we don't show any long-term items or balance sheet items, assets and liabilities, and the difference we don't call like net position, of course not owner's equity, rather we call it fund balances. And then within fund balances you may have several categories, for example non-spendable fund amount, or committed or assigned. For based on the purpose how the fund will be used, you categorize the fund balance. And you might have some free fund that we call unassigned fund balance. So unassigned fund balance means these are the free fund you can use for any purpose, and if you have any designated purpose to use the fund, you have to categorize based on your plan, restriction, or commitment. So what we're gonna do now, we will assume this $45,000 dollar money we still have in our fund, but it is now unassigned, but we will remove that from unassigned and we will put it back to committed fund. So we will remove the fund balance. Remember, fund balance is just type of a net position or equity, which is a credit item. So to remove, we have to debit it. So we are just reclassifying the fund balance. So we will debit unassigned fund balance. And then we are now keeping that $45,000 in my fund, which is committed to buy the truck immediately next year. So the money is still in the fund, but I'm categorizing it committed fund balance. You can call it fund balance committed or committed fund balance. And this is $45,000. This is how I reclassified, and I will take this fund balance from one year to another year. So now here, if you see, the table will look like this. So this part of the table, you already have seen it in our previous table, right, which we already have shown here in our previous table. Now this part is showing some extra columns to show you the fund balance. So when we did our appropriations, then we recorded those, we kept aside some money, and then we purchased one truck, and you know how much money is spent for that. And then what we did for our fund balance, we kind of recategorize it from unassigned, and we put it or credited as committed fund balance. Now we will do quick problems from module 1. One example, it says about appropriations and encumbrances. So accounts balances in the general fund included the following: appropriation, that was their first planning, how much money they are keeping aside or planning to spend for the general fund. And then they had encumbrances, and they actually spend this money, and they also have voucher payable. So we have to calculate the remaining appropriation available for use by the county. And you remember the table, it says what we do: we first budget, which we call appropriation, and then we do the activities. Of course, it's aligned with the encumbrances, and at the end we see how much remaining we have in our appropriation, whether the amount is positive or negative, the balance we have. So you have to calculate that remaining appropriation, and you can remember that BAE, budget activity encumbrances. So this $745,000, that was the initial appropriation amount, and then they spent it. Whatever reason they planned for it, they spent it $298,000. So that money is gone. So they spend it $298,000. So you subtract that, and then they still have encumbrances here. So that they are already placed order, maybe the product or the item is not received yet, but they still have that encumbrances balance. So we have to subtract that $37,250, and this will give you how much money actually you reduced from your appropriations. So that will give you the number for your remaining appropriation balance. So voucher payable doesn't matter. Voucher payable means a part of the expenditure that you didn't pay, right, in terms of cash payment that you still owe. So the remaining appropriation will be $745,000 minus $298,000 minus $37,250, and if you do the math, it will be, I guess, $409,750. Then we have a couple of quick problems here. Which internal account should Spring Township credit when it issues a purchase order for supplies? Right. So this means the encumbrances journal entries. You already know you have to debit encumbrances and you have to credit budgetary control. It's the purchase order, budgetary control or encumbrance outstanding. That's in the textbook term, but either way the answer will be fine. So here for purchase order, we record the encumbrance journal entry, debit encumbrance, and credit budgetary control. The answer is D. Number 2, Elm City issued a purchase order. That means they did purchase order for supplies with an estimated cost of $5,000. When the supplies were received, the invoice indicated the actual price was $4,950. What should Elm debit credit to the budgetary control? So remember, when they issued the purchase order, they did the encumbrances journal entry, which was encumbrances debit and budgetary control credit. Now they did the actual purchase. Remember, the encumbrances was $5,000. Now they did the actual purchase. Of course, they will record the expenditure 4950, either cash credit or voucher payable credit. But now they have to reverse these encumbrance journal entries. That means they have to here debit budgetary control, and when they eliminate that encumbrance entry which was recorded as per that price 5,000, they will use this $5,000. Remember, not 4,950, because this is the actual expenditure, but to eliminate the encumbrances and budgetary control we will use $5,000. So the answer is D.